Gold is back. It's been a wild ride for the yellow metal. Prices have skyrocketed in recent months. This surge has captured everyone's attention. Investors are scrambling to buy. But what is driving this gold rush in 2025? Gold prices have smashed past records. A new all-time high was set in February 2025. The price hit an incredible $2,954.97 per ounce. That's a jump of over 40% since the start of the year. This surge marks a 5-year increase of over 78%. The trend shows no signs of slowing down. This gold fever is global. Investors everywhere are buying up gold. From individual investors to massive institutions, the demand is insatiable. But one group stands out: central banks. These powerful institutions are adding tons of gold to their reserves. This buying spree is a major factor driving the price surge. But it's not just central banks. Falling interest rates, geopolitical tensions, and economic uncertainty are all contributing to gold's allure. Investors are seeking safe havens for their money. Gold, a traditional safe haven asset, is looking more and more appealing. The gold rush of 2025 is a fascinating phenomenon with far-reaching implications for the global economy. Central banks around the world are on a gold buying spree. They're snapping up gold at an unprecedented rate. This buying frenzy is a major force behind gold's price surge. But why are central banks so eager to get their hands on gold? One word: uncertainty. The world is a volatile place right now. Geopolitical tensions are running high. Economic uncertainty is casting a shadow over the globe. In these uncertain times, central banks are turning to gold as a safe haven for their reserves. The freezing of Russian central bank assets in 2022 sent shockwaves through the global financial system. It highlighted the vulnerability of holding assets in foreign currencies. Central banks, particularly in countries like China and Russia, are now seeking to diversify their reserves away from the US dollar. Gold, a tangible asset not subject to the whims of any single government, is seen as an attractive alternative. Central bank demand for gold has been staggering. In 2024, purchases exceeded 1,000 tons for the third year in a row. This trend is expected to continue, if not accelerate, in 2025. China in particular has been aggressively accumulating gold. A new pilot program there could see insurers buying up to $27 billion worth of gold. This insatiable appetite from central banks is injecting billions into the gold market, propelling prices higher. The world is holding its breath. Geopolitical tensions are simmering, economic uncertainty looms large. In these uncertain times, investors are seeking refuge. Gold, a safe haven asset for centuries, is shining brighter than ever. Falling interest rates are making gold even more appealing. The Federal Reserve slashed rates in 2024, further cuts are expected in 2025. Lower interest rates make bonds less attractive to investors. Gold, which offers no yield but acts as a store of value, becomes a more attractive alternative. The geopolitical landscape is fraught with risk. The war in Ukraine continues. Tensions in the Middle East remain high. The US presidential election in 2024 adds another layer of uncertainty. These geopolitical risks are driving investors towards safe haven assets like gold. The global economy is sending mixed signals. Inflation remains a concern. The US is grappling with high government borrowing. The DeepSeek announcement in January 2025 sent shockwaves through the tech sector. These economic jitters are making investors nervous. Gold, a traditional hedge against inflation and economic turmoil, is seen as a safe bet in these turbulent times. The gold rush of 2025 has taken many by surprise. Prices have soared to new heights. Central banks are hoarding the yellow metal. But what does the future hold for gold? Will this bull market continue, or is a correction on the horizon? Analysts are bullish on gold's prospects. Goldman Sachs predicts an 8% rise to $3,100 per ounce by the end of 2025. Some analysts believe gold could reach $3,300 or even $4,000 in the longer term. The combination of strong demand and limited supply creates a perfect storm for further price appreciation. However, risks remain. If the Federal Reserve cuts rates less than expected, it could dampen demand for gold. Speculators reducing their long positions could also weigh on prices. Despite these risks, the long-term outlook for gold remains positive. The gold rush of 2025 is a testament to the enduring allure of this precious metal. In a world grappling with uncertainty, gold offers a sense of security. Whether it's central banks seeking to diversify their reserves or individual investors looking for a safe haven, the demand for gold is likely to remain strong for the foreseeable future. The future of gold, it seems, is as bright as the metal itself.